What about the depression?
Worst case scenario. So you back up the truck after stocks had fallen 60% by 1931. So 2 years after it started in September 1929, you're down 60%, and you're the only person alive with money left. And you say, I'm going to go all in. From that point, stocks fell an additional 65% before bottoming.
Oh, my God.
The crazy thing is, 1 year later, you were down less than 10% because there was back-to-back months in 1932 that were up 38%. So July and August of 1932 were up 38% apiece. In 5 years, you were up 120% on that money. So it really depends how much you can live through a loss. So you don't want to be the jumping in and then jumping out again if they go down further, because they certainly could go down further. So that's the point with buying early. Here's a question. Would you rather buy in too early or buy in too late? What would you feel more comfortable doing? So would you rather buy in with stocks falling further, or would you rather be one of those people that misses the bottom and then tries to buy late? Or my point is, I think a lot of people who try to buy late are going to be waiting for, this is a dead cat bounce, and they'll just, a lot of people will never get in after we have the recovery because they'll think it's not going to last.
I completely agree. I think that buying after the bottom is extraordinarily difficult because you'll just think it's going to roll over again. So in a perfect world, I'd much rather buy after the bottom, like obviously, right? I'd rather buy after we're 30% off the highs, off the lows, than buy and fall another 30%. So I'd rather be a late buyer than an early buyer, but we don't get that choice.
You talked about the other side. You had a post where you said, okay, let's say you sold last week and now stocks have bounced, at this point, 12 or 15%. And let's say you're back, like you initially missed a 10% downswing or whatever, and you feel
so you felt great, yeah.
Yeah, you're patting yourself on the back. Now stocks have come back, and you're back to the very same level you sold. What do? You basically are back to even. So that's why we always say, like, going all in or all out. You could be a hero and you could look like a genius if you did that. But if you make the wrong move and the market plays head games with you, let's say it goes up even more, and then we have another leg down. Like the head games that you can play with yourself from this is just
let's say that
too much to think about.
Let's say that last week you were really, really scared, as we all were, or 2 weeks ago on the 12th, which is where we're back to. So let's say that instead of going all out, let's say you were 60-40 and you went to 50-50 or even 40-60 because you were really panicked. And now we're back to where you made the shift. Do you think you're mad? Of course you're not mad. You're relieved. But
yeah, you missed some volatility.
Yeah, you're relieved that we're back to, that stock stopped falling. So it's all good. But if you went to 100% cash, what do you do now?
Right.
What do you do now? Because, and it's not to dunk, because stocks can easily roll over. I'm just saying, like, okay, so let's say, you know what? That was wrong. I panicked. I'm going to buy back in, but I'm going to even be smart about this. I'm going to have a lower amount of money in stocks. And then stocks roll over again. You're like, oh man, I'm an idiot. Like, do you go to sell again?
Yeah, I think whatever you do, you have to have a best case and worst case. So let's say you think you're going to be prudent and you think stocks are going to fall 40 or 50% from the highs. And you say, I'm going to buy, and this is what I talked about a couple weeks ago. Like, my theory is if they get to 40%, I'm putting some money in. If they get to 50, I'm putting even more money in. And let's say it doesn't get there, though. You have to have that other contingency plan of what if stocks don't go that far? And they certainly could, but they might not. It's possible that the stock market, again, doesn't get as bad as the economy this time. What are you going to do in that situation where stocks don't go as low as you think they're going to? Are you going to sit in cash and wait the whole time, or are you going to have a contingency and put something to work slowly over time and then just dollar cost average normally?
And imagine you're out. Do you hope that markets go lower? Like, isn't that just a repulsive idea? Like, to hope that things get worse?
Yeah. What's the Charlie Munger quote about gold? If you turn out to be right about the apocalypse, no one likes you anyway, or something. Like, that is a tough position to be in, to root for stocks to go down.